and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Monday. Well, looks like we have a little bit of progress happening on the U.S.-China side. I saw last night that it was going to be a 3 a.m. Eastern Time announcement from Scott Bessent, and there's your 3 a.m. announcement. So Aussie up, dollar up, CAD up, New Zealand sideways. Dollar's leading the charge right now. Currencies have opened up quite a bit at 3 a.m. You got Japanese yen way weaker and the Swiss way weaker, euro pound in the middle. So interesting, explosion of volatility today. We had 3 to 4% gaps in the indexes. Futures market took a huge rip. Take a look at, today's price action is actually pretty sweet. It was pretty easy sell side this morning, just grabbing a few bucks out of the kind of the market. Shocked. Wow, we're up 3%. I mean, everyone's sitting here like the S&P is killing it today. It's like, well, intraday hasn't done anything. It was just all gapped up from futures. If you look at the futures feed last night, it was essentially all happening at 3 a.m. Eastern Time. So this was a gap open on probably some optimism, and then there's your official announcement at 3 a.m. So I look at that as, if you're already in, if you bought the gap and you're waiting, that's tough to trade. It's one candle. There's been a little bit of follow through. Let me go down to like a 1 minute chart. I don't think you really got any of that trade. If you try to trade the 3 a.m. candle, look at that thing. That's a 1 minute candle on the futures market. So you would have already been in just based on sideways movement. That's around 6 p.m. Eastern Time all the way to 3 in the morning. So you got a couple points. We're literally talking about 54 to about 68, about 14 points on ES, and then just one massive candle to the upside. So that 3 a.m. announcement is pretty much what put us in to our current price. Candle closes here. Current price is right here, like within just a couple of points. So pretty wild stuff. I'm, pretty happy that away from the all-time highs. So we're still X amount from the all-time highs. We're still about 5.5% from all-time highs, and I've just crossed highs for the year by about 40 grand. So I'm curious, if this is going to be just an island gap. Is there something that's going to fill this week? We still have CPI data coming out on Tuesday, I believe. So Tuesday, May 13th, here's the CPI news coming out tomorrow morning out of the U.S. It's going to be all CPI numbers. I thought was kind of interesting. So the previous core CPI was 2.8, and it's forecasted for tomorrow to be 2.8. The previous year over year was 2.4, and it's forecasted to be 2.4. So taking a look at trueflation, we've still been trending lower, which is not a bad thing. But as with everything else, there is going to be a backfill in this move. Judging by, let's just zoom in here on a smaller time frame. Judging by the way this market is gapped, even in the futures market, we've got some huge gaps. So that's an obvious gap right there. This one is still like a tiny little sliver gap. Gap here and gap here. Now I do see these gap opportunities as buying dips, like buying the dip. It could be back down here towards the 5,700 zone now. This whole thing with U.S. and China, it's been another 90-day window. The U.S. has backpedaled from a 145 down to 30. I think China backpedaled from a 125 down to 10, and the market's loving it, right? It's going to take months, if not years, to really ink and officially, make a trade deal. But the market is just like completely moving on headlines. It's completely moving on headlines. So anyway, if there's some profit taking, expect there to be some gap filling. Um, I still would like to be buying some dips in this area between about 5,500 or so. I'd say about 5,600 to 5,400. I kind of look at this as an opportunity to find some gaps. The one thing that I find a little concerning is what is happening to U.S. yields. Okay, U.S. 10-year yield is still higher, like exploding higher, actually. So we're back up to, I mean, we're up 32 basis points since the first of the month. And this, I mean, whether you pay attention to this or not, look, if we break this high or we come back to this high, um, I mean, this Liberation Day announcement was what kind of broke the U.S. bond market, right? If you look at the 20-year yield, the 20-year yield, if we get back up towards 5% of this 20-year yield, something is probably going to happen. Like that was what made Trump and co flinch with a 90-day pause, because we saw just yields move like crazy. That was the basis trade blowing up. And I mean, I guess if we're lucky, we're just going to see it kind of chop around in here. But I have real concerns if the 20 years over 5%. I have even greater concerns if the 10-year is going to 5%, because we were there in 2023. So I think this ultimately chokes off growth. I mean, this might be exciting, like, oh, the markets are on their way to all-time highs. Like, yeah, maybe they are, but a reality check is coming down the road at some point. So I shared this. Let me see if I can find the screenshot. I did this on YouTube last week. I talked about kind of this paradigm A, B, and C. Is it this one? Yep. So I had a YouTube video. This is a thumbnail if you look for it on my channel. But paradigm A, B, and C, and I'll just kind of explain these really quickly. So this is somebody I follow pretty closely on the macro side, Darius Dale of 42 Macro. Paradigm A was the Biden administration. Paradigm B is coming in with Trump, trade war, flexing muscles, recalibrating the entire global trade picture, and obviously making it America First policies. Paradigm B broke. Like the Trump administration was broke. They flinched, and we saw the basis trade break. We saw the bond market break. And it wasn't a break per se, but it was definitely it was like cut hard, and that was the instant flinch of, hey, we're going to do a 90-day pause, and it just gave the whole world a little sigh of relief. So paradigm C is, we've talked about this. The K-shaped recovery was since COVID, right? So the haves and have-nots. If you have assets, you do very well. If you don't have assets, you deal with higher prices and getting left behind. K-shaped recovery, right? That was paradigm A under Biden. Wealthy people did very well. The 1%, the 10%, those that have investments, those that have assets did extremely well during the Biden administration. Okay. B was supposed to be change this, okay, close the gap and create more of a E-shaped recovery where we can level things off and improve. So instead of having, the lower end get hurt worse and suffer more, it's like we're going to try to uh, create some improvements to inefficiencies, right? So you narrow, Main Street, Wall Street a little bit. Well, that was the pain in Wall Street that Trump and co were talking about. There's going to be short-term pain for long-term gain, but with the basis trade, with the bond market, snapping the way that it did, it really showed how fragile the entire system is. And so I think this got pivoted to now maybe something like this, if we're lucky. It's just been angled up. So those that have still have more and still do well. I think this is going to be potentially putting us up into another bubble. I think we're truly seeing that the Trump administration doesn't want to see more pain in the stock market. They saw it once, they tried it, it didn't work, it backpedaled or backfired, so they backpedaled, and here we are watching the markets up, 20% off the lows, and I think if we break to all-time highs with momentum, we're going to face another bubble. just like we've had since 2018 to now. We've had all these highs and lows and all these highs and lows. We've had 7 pullbacks in 7 years of 20% or more. It hasn't been every year, but like we've had 7 total pullbacks of 20% or more in the last 7 years. So I think these bubbles are just getting they just swell more, they happen faster. Obviously, people have been conditioned to buy the dip for a long time. But point is, it's just stuff you need to be aware of, like bigger picture. I think there are concerns. I mean, I think if we get to, if we get to all-time highs, I'm sure it's going to be celebrated, right? If we get to all-time highs, I'm not going to sit here and say like I'm calling the top, I'm calling the top, I'm calling the top. I think that's crazy. Um, but I just want us to be aware that there's got to be a way to measure out like some type of move where, okay, if this thing runs, let's say, connect the dots at the highs, right? So we have resistance here, and we run up into, resistance again. It's like, can we get to 6,800? Can we get to 7,000? Sure. But after this stretch move, it's like, well, are we talking about a 40, 50, 60% move from the upside? Let's just say we go from the April lows to 7,000. That's a 45% move, right? Let's say that happens in like the next 12 months. I mean, it's just wild amounts of volatility. But does that mean we have to top out at 7,000? Not necessarily. I don't know. I mean, honestly, I'd almost think it'd be easier to not have to trade a freaking bubble and see this market crash. And it's like, well, we're going to have a broadening pattern, and we have, a 45% rally and then a 50% drop or something insane like that. I'd almost rather see this market figure out where reality is, because it's not like right now is not reality. Whatever's happening right now is not reality. All this is self-inflicted wound. All this soft data that has yet to become hard data. The market's not pricing all these bad things. U.S. slowdowns, like market's not pricing any of this stuff in yet. Earnings have been fine. Buybacks are as high as they've been since like 1984. I mean, so look, money's still going to the system. The narrative on the trade war has been much improved. So at least right now, because we just poked the highs, it's like, okay, well, I see a dip. If we get a dip like this would be a reality check. That's fine. A little dip that we can buy and then justify participating at all-time highs. Okay, cool. I can get behind that trade. The hardest trade for me to wrap my head around is no gap fill, no gap fill, no gap fill, no gap fill, and the market just goes straight up to all-time highs. Like that is the dumbest trade. That is the stupidest chase to all-time highs. And if it goes higher, it's just a matter of like, okay, when does this thing roll over? And if it does roll over, we're going to fill some gaps. And that's going to be, everyone's all excited and celebrating like, oh, we survived it. And then it's like we come right back and we backfill all these gaps. And just the constant head spin of, you're down 1 month and then you're up the next. And this is why they say like don't time the market. Well, I mean, look, Warren Buffett may not be timing the market, but I have a Buffett indicator. Okay, here's his valuation model. This one, where it is total stock market value over GDP in the US. What is the Buffett indicator showing right now? Strongly overvalued stock market. We're 2 standard deviations above the historical trend lines on Buffett's US stock market value to GDP. So Warren Buffett at nearly 20% of cash and Berkshire Hathaway, they've been a net seller for, 3, 4, 5 quarters in a row, maybe longer. I wonder, like, as far as timing the market, when does Buffett deploy cash again in a big way, right? When is he a net buyer of stocks again? I don't know, but not now. And if we go to all-time highs, not now. And I just wonder, it's like, so does Berkshire just sit on 20% assets in cash, collecting 4%? I guess that's not a bad way to do it. They're not exposed, but they're also going to be said like, oh, you're missing out. You're missing out. Well, nobody said he was missing out when the market was down 20%. So anyway, nothing's perfect, right? So just saying, don't be surprised if we have a little bit of backfilling, gap filling, at least from this candle, this 3 to 4% gap on the Nasdaq. It's like we were up at one point today, I think over 3%. So from the close on Friday to the open this morning, up around 3.02%. Qs, I think, were up over 4%, starting to backfill as well. So I'm just curious as it gets closed on the week. Up 3.88% from last week's close to open today. The Dow, same thing here. Dow is up about 2.7%. The Russell, about 4.43% of Russell. So the first thing I did this morning, and I'll update this in Pulver alerts since this is more of the campaign trade. Russell IWM, when we were up here at these highs, I rolled out some calls. So I'm going to add in, I'm just going to add a reply to this right now. So I'm going to go reply, IWM, covered call campaign update, rolled calls to 5:30 expiration 200, sell call for $1.30 credit. So new break even price is going to be 195.70. Okay, so that's going out to everybody. Then also on Tesla, need to find my Tesla trade here. Tesla rolling calls. Yep, so I rolled calls this morning as well. So I'll reply to this one. Tesla cover call update. I rolled the 257.50 call with a 5:16 expiration out to 5:30 expiration and down to 255 call strike for $4.30 credit. Oops. So my new break even is, let's find it here. Tesla, my new break even's in the 230s, 235.27. 235.27 for 500 shares. I also rolled a 277.50 call to 5:30 expiration and kept the 277.50 strike for $3.79 credit. So no break even on that chunk would be 263.94. Okay. So rolled some calls on Tesla, rolled some calls on IWM. I did go out a couple weeks to do that. I'm just going to kind of keep using those to generate income. If we have a gap fill, then I'll pull out as much of that credit as I can. If we're back below $200, that's fine. Let's keep rolling calls. On Tesla shot up above $300. Again, way up here towards 320. Room to pull back. I still like Tesla on the right-hand side of the trend line. Pull back to 280, 275, 270. Anything on the right-hand side. I mean, heck, we can pull back to 220. I still like buying Tesla. I don't mind it. I'm obviously going to miss a little bit of this crazy upside if the thing just keeps ripping higher, but I don't know that. So I'm just going to keep selling calls, getting some time in the trades. And if it just stays out of the way, eventually I'll let it get called away. If it goes dramatically higher at some point, it's going to be not worth the time to roll because I'm only going to get minor credits for it. And I don't want to have to, roll out like 30, 45, 60 days at a time. I like rolling out like 1 or 2 weeks max. Okay. So anyway, net. So, I mean, help me today on rolling those calls. So $1.30 on IWM. I have that on 11 accounts. So $1.30 on 11 accounts just improved my profit by $1,430. And then on Tesla, I have a 430 times 500, improves my profit by 2150. 2150 and another 379. So 2150 plus 379. So about $2,500 in improvements on just some covered calls. Not bad. MicroStrategy had a nice little pop. Bitcoin is overbought conditions with the daily time frame. I did say watch out for these all-time highs again. Look, I'll be as excited as everyone else if Bitcoin hits all-time highs and keeps running into the 120s. I just wouldn't be terribly surprised. What happened to my drawing tool? I wouldn't be terribly surprised if Bitcoin does come back in and fill this candle a little bit. So we pull back to, maybe 97,800, 97,800. Maybe we pull back a little bit more into those other candles. Okay, give me 1 second here. Okay, so let's do dollar index, gold and silver, Bitcoin, oil, the works, right? We'll keep working our way through analysis. What's everyone doing? We seen some fresh highs in the morning. We stoked about this trade war stuff. It's like the rest. What trade war, right? Art of the deal, as they say. I just think the whole thing is stupid. So self-inflicted. Scrambling to see the market try to get back to all-time highs. I just I question like the foundation and the footing. I know the U.S. economy is showing resiliency, but I think the question is like, are we going to see growth? Are we showing resiliency or are we showing growth? You know, I think we're showing resiliency, but I just have my concerns with the yields that still debt is not like crazy attractive. I mean, we're down to some lows again on TLT, down to some lows again on SHI and IEF. So like your 1 to 3 year, 7 to 10 year, 20+ year bonds look like garbage in the U.S. right now. Yields are still higher. Mags, Mag set. Look at this thing. Sheesh. Mags up another 2+%. Probably some resistance ahead. I mean, we're pulling back into this 618 retracement. If you look at the swing from high to low, so I wouldn't be surprised if the market does at least fill a gap. The nice thing about this with a lot of these structure plays is you look at this high and we are higher. I think a lot of this market is setting up for a potential bullish pattern. Now the bullish pattern still has a chance to pull back into a right shoulder or a right tip, and you want to see if you have that low to high, higher low to higher high. So if structure plays out, we hopefully will see a chance to kind of build positions again and then get our way back up towards these all-time highs, whether it's mags, whether it's the stock market. We'll see if that plays out. Okay, just give me a couple seconds here. I've got some quick messages. Okay. Let's go dollar index. VIX is down into the teens again, so we finally cracked that 20 handle. Bond volatility index, SVXY gapping higher. Wow, that's crazy. I was in and out of this trade like weeks ago. I bought this thing down around $34. I closed out for about $37. I was actually pretty happy with that trade. It only took a couple of days, and now we're getting like a big push to the upside. So that would have taken another 2-3 weeks to move the needle, but I'm happy I'm out of that trade. Dollar index. Let's go dollar index here. Dollar index. This did what I expected, which is a pullback. Now, I think the next question on the dollar is, are we in a range and this is just like the bear trap at the bottom of the range, or is this truly Anything that pulls back on the dollar here is going to be a chance to have bigger sell opportunities later, right? I mean, we pull back in this inefficiency. If you go from a high to low, I'm sure there's going to be some levels here, but I don't know. Look, I don't know if it's going to be this easy. If we have high, low, pullback here, I don't know if we just and instantly break the trend line and then go make fresh lows on the dollar. Uh, let me throw this at you. So if we have lows here, okay, and this is a kind of a deeper, nastier, one of the worst starts the dollar seen in like 30 years. Um, is it possible that we have a low, high, higher low, higher high? We come right back into the halfway point of this. That would be the better sell spot on the dollar. So I'm just throwing it out there. If the dollar stuff is going to continue, you see it on individual currency pairs, but Aussie dollar, likely still has room to pull back. If you take this low, I mean, we could pull back anywhere between 6,300 and even like 6,000. We could pull all the way back in here and not do any crazy damage to the Aussie dollar. Still looked as a buying opportunity, and I would be targeting kind of open space swing highs. You look at euro dollar. This is the reward we talked about. If you were short euro dollar, I didn't have a perfect spot outside of if you sold it here, you got to be willing to sell at the highs. So area 1, area 2, it is going your way. You're now at the 30% retracement level. If we get to a 382 or 50, I would be taking profit on that retracement or moving stop losses. Okay? I mean, it's good that the euro dollar cooperated. We had this crazy run from lows at 101 or 101.50 all the way up to 115. That's a huge move on the euro dollar. So pulling back on one of the more liquid currency pairs, yeah, I mean, I want to see this thing at 110.50. I want to see this thing at 109. Okay. I mean, heck, I want to see it pull out back to 106 if possible. But the sell side was the trickier spot because the dollar was just so beat up. So anyway, point is, if you're short euro dollar, I think eliminating risk might be at least step one. If this wants to run a little bit lower, that's good. Once you get into some achievable levels that you're happy with, then move stop losses, start trailing some profits. Not a bad spot. Pound dollar turned as well. This is a difficult one to trade, though. I think euro dollar had a better structure set up. New Zealand dollar pulling back, same thing as Aussie dollar. We have room to pull back into this area that could still be a swing trade. As long as we don't break this low, swing into some open space, and we trade this thing all the way back to 63.50 or so. But I want to see some pullbacks. Does it mean I'm short in New Zealand dollar? No, right? I said wait for a pullback. If you're short, then there's an equal high you would have shorted. That's a great spot to enter, and it's working out fine. Dollar CAD. Dollar CAD. This is why I wasn't excited about selling. This to me looked like a pinch and a falling wedge, and we're getting a squeeze to the upside. Dollar Swiss. This one looks better. Dollar Swiss making a nice run. So, pulling back into this little cluster. I still like this trade back into this pocket around 87 to 8,800. So that's what I'm watching for right now. My spots here, let me check on some of my positions. Okay. So dollar Swiss. Yeah, we're looking better. So checking my break evens here. So Aussie Swiss, I mean, much closer. So Aussie Swiss behaving. What I'd like to see is if we're putting in a bottom here, kind of grind up into this pocket. I've got some good profit already. I'm trying to get back into this little cluster of support resistance. I might take profit and then start looking for a swing trade into a three wave move. So this is down. wave 1, 2, 3, that might be enough for me to say I'm good on the trade. There could still be a fourth and fifth wave coming, but if I could reload on a pullback for a wave 3 push, that wave 3 could pay out very, very well. So I could have a chunk of profit on this recovery, and that could be chunk 1, enter in for trades on pullback wave 2, and then get a push to symmetry on wave 3, turn that into another big win. So that's kind of across the board for my Swiss pairs: Aussie Swiss, CAD Swiss, Euro Swiss, Pound Swiss. I'm out of. Once this thing broke higher, I got out of this trade. So my Pound Swiss trades were much earlier on this support. We got back into all this indecision. I closed the profit there. Also, I wanted to get out of the Pound Swiss because it removed some margin from me. But if you are in Pound Swiss, this is working out like I expected, which is pulling back into closing this pocket here, closing this pocket here, right? So I do think this has more upside to like the 12 and 1300 zone if you're holding. But the margin for me as a US trade with 50 to 1, this one is more expensive than the others. So I didn't trade New Zealand or a Pound Swiss as heavy. New Zealand Swiss, same thing. Is this a 1? Are we pausing? Are we going to get a push? Is this a wave 3 and then 4 or 5? Either way, if I'm getting maybe a profit chunk in here, 1, I'm hoping this is a 2 that I can reload in, and then a 3 to symmetry. I'd like to see a symmetry wave that gets back above the 200 moving average, and I'll take some profit there. Okay. So dollar Swiss looking better. I think we pull back on dollar Swiss towards, if we get to like 8,800, I'm going to be pretty happy on this trade. So we get to like 87.50, 8,800, I'll be pretty happy there. I'd like to say we come all the way back to 92, but just kind of watching to see how this behaves. This may not be like a full directional move either. This might be short-lived. We could be pulling back a little bit, pulling back to retest the lows again. It might take some time to carve out the lows. We might have to get in the right-hand side of the trend line. But if I'm patient, willing to hold this, rates have still come down. Swiss is at 0.25, dollar still hanging at 4.25, 4.5. If gold is dropping, like the dollar's recovering, gold is dropping, that's also helping my Swiss. So I'm short Swiss. I'm short against the Swiss, meaning I'm a long Aussie Swiss, long CAD Swiss, long Euro Swiss, New Zealand Swiss, dollar Swiss. Gold dropping. Okay, this is what I wanted to see. So gold is consolidating and still consolidating, which is fine. If we get a deeper pullback in gold, that's also fine. This is why I'm hoping that silver looks a little bit better. I mentioned this last week, but if you take a big picture look at gold and silver, if this ratio ever plays out the other way, so we've had, this has been the highest of highs with gold versus silver ratio. That was back in, was that during COVID? Yep, that would have been COVID. Silver, gold got up to 130 against silver. But then, I mean, that's a huge turnaround. So I'm curious. I mean, does this end up being a movement back down where gold silver the ratio kind of rebalances? Does it get to an extreme and then it rebalances this way? Either way, I still think both trades are solid. I just think silver, to me, having a 2011 high, having a 1980 high, I like the trade and I like the upside that I can measure. So high here in 2011, high here in 1980. I'd love to see silver, continue to run its way up into the 40s. Okay, Bitcoin, like we mentioned on the daily time frame, I think we have some pullbacks coming. Probably pullback in like 98,000. If we hit the all-time highs, that's fine. I'd almost like to see this happen first. I'd like to see us pull back to 98 before we get to all-time highs. I'd honestly like to see us pull back into this structure also before we get to all-time highs. It'd be nice to feel like as we get to all-time highs, we're actually going higher instead of, like I've mentioned, well, if we just run up here with no pullbacks, and we're just going to run up here and probably come back. So I think if anything, you should be encouraging a little pullback on Bitcoin, maybe a little pullback zone on Bitcoin, because if we're able to participate with a dip or a dip, that once we get to all-time highs, we don't have to stop. We can just keep going. But if there's not much pullback here, I think these inefficiencies just cause some some gaps to get filled, some inefficiencies to get filled back in. MicroStrategy up into the 400s. I do have some covered calls into. Let me see if I can freaking roll this. I don't know if this is going to be great, but I've got a couple. I've got like 300 shares of MicroStrategy right now, and let me see MicroStrategy here. So I've got a 310 out to June. I don't want to roll this out too far. Let me see what the expiration is. So June 20th. If I roll this, I mean, I can roll it out to June 27th or July 18th. That's a big fat credit for July. There's a lot of uncertainty there. I'll cross that bridge when I have to, but for right now, if I went out to the end of June, keep the strike the same at 310, I can still get another $2.50 out of this trade, which isn't awful. It's not great, but it's a lot better than rolling it out by 30 days. So let me see if I can get like $3 out of this roll real quick. I'm going to keep the strike the same at 310. $3 not filling. 290 not filling. 280. Just going to try to grab a little bit more income out of this if I can. 280 not filling. 270. Okay, just going to keep pressing this lower until I get filled. 260. 250. Come on, man. Be generous, would you? 245. All right, just got filled at 240. Okay. So that's an MSTR. I rolled to June 27th. And that's the same strike at 310 for a 240 credit. Okay. So same thing here. Have the shares. There's my call. Roll this out a week. Keep the strike the same. Filled at 240. Filled. And this account should be the other one. $310. Roll. Rolled out by a week. 240 at 310. Filled. All right. So that lowers my cost basis a little bit more. Break even 254. Bring that cost basis down a little bit more. So 254.97 minus 2.40. Now it's 252.57. Rolled to 627 expiration for 2.40 credit. New break even is 252.57. Okay. So that way, if it gets called away at 310, 57.43 a share times 300 still makes 17K on MicroStrategy by June 27th. Not bad. All right. I'm seeing some yen pair requests. Sure, fine. Okay. This is doing exactly what we talked about. You saw the bottom here, August 5th. You had the courage to buy this low. You know, it was obviously tread lightly when the market was crashing on Liberation Day and post-Liberation Day, but the V bottom that came in, all the yen crosses have been cooperating. So, you know, if you've been buying dips on CAD yen with equal lows, it's worked out pretty nicely. You know, euro yen obviously behaved differently with the dollar, but still, you buy equal lows, it's paid out really well. Pound yen, equal lows, it's doing its thing. New Zealand yen, August 5th lows doing its thing. Dollar yen. What I say the dollar yen could pull back to probably 148 to 149. It could be more, but same lows, right? This is a 140 low held up really nicely. Here we are, 800 pips off those lows. If you had the courage to buy them, it's not. Look, yen pairs are not easy. They're never easy. But if we don't do any damage below this level, this was a risk on trade. And now it's 800 pips of opportunity. So if you took advantage of it, there it is. That's what I see. You know, um, I mean, unless we're going to have like a big risk off trade, it's like I don't really see this changing much. So I mean, right now it's like I would not be selling, dollar yen until we're on the right hand side of this trend line. This could pull back right into this cluster, right? And we'll see, does the market break back above it and continue to be just this huge range trade like this, where all we know is the dollar yen is we had a July to August structure that could be, this kind of permanent range trade that, it's just not easy. It's not easy to know, like, are we going to make fresh lows on the dollar yen? Are we going to make, who knows? I'd say right now it's like you got to trade what you see on the yen. You had a good opportunity to buy these lows and you had some direction going your way. That's all you can ask for. So if you're taking advantage of that, good. If I'm looking for a trade right now in the yens, I don't have one. All these have already made the pullbacks that have been talking about the last 3-4 weeks. Gold and silver, yep. So gold's pulling back as expected. I want to see more. I mean, consolidation is fine. Consolidation's fine. Consolidation is fine on gold. Just takes away a little bit of the attractiveness of it. Gold obviously had a good run with risk off trading. We're getting less than that right now, and the market's recovering still. But if the dollar is going to recover more to the upside of DXY is going higher, then I can see gold falling lower, which is fine. I still want to get position on gold long, whether that's 3,000 or 2,800 an ounce. That's where I'm going to be at. Okay. So if we pull back to 3,000, 2,900, 2,800, I like gold a lot. If it's just going to be sideways here, it's okay. I like silver more. So silver is still my preferred trade, especially if it breaks some highs at, $35. I think silver has a lot of upside potential, but we need to break some key levels. There's still a lot of support. We could have pullbacks in silver to 29 and 26. I'm still interested in buying those pullbacks if they're offered. Otherwise, we break resistance. Let's go higher. Okay, Ethereum finally showing some love on the right-hand side of the trend line. I don't have any exposure on Ethereum. I did trade some EETH last year, ETHA, some of these like ETFs. The EETH is a little better with pro shares. But anyway, I don't have anything. I'm still, I like Bitcoin a lot better. I'm in IBIT quite a bit. Got covered calls that expire this week at 62. I don't necessarily want to cover them more. I could, but I don't want to. This is one that like I want as much price appreciation as possible on IBIT, so I'm not trying to get in the way. If this thing's going to run to all-time highs, if Bitcoin's going to run to 120, 130, 140, I don't want to stop this thing and collect just a tiny bit of premium. If I'm going to sell more covered calls than IBIT, it's going to be I want this thing to run, and then once I think we're kind of overextended, then I'll start selling covered calls, so I can collect a premium but not necessarily forfeit any of the capital appreciation. All right, EWJ, it's Japanese yen. DAX was up to all-time highs, fading a little bit today, but still fresh all-time highs. What a crazy V bottom that was. FTSE still almost to the highs. Argentina just poked all-time highs. China, nice little lift off from last week. Brazil and Latin America still looking pretty good. Mags, as I mentioned, gapping higher. Just be conscious of this. We have a pretty good gap here on Mags, pulling back towards the 618 retracement, resistance. We could see some resistance there. We're kind of done with the earnings season on Mags. They've all kind of printed. There's been some more risk appetite coming in, some relief rallying, just because we're getting more news out of the trade talks. But Apple, big gap today. Amazon, huge gap today, actually. Are you kidding me, dude? That's so it's funny. We had an expiration. I had an expiration for one of my services with a 5.9 that I was looking at an earnings play, and it's like literally 1 day later. Had nothing to do with earnings. All the freaking move was after with this trade war stuff, but stupid. That was the difference between losing $270 and making $270. I guess $230, but still, nevertheless, frustrating. Broadcom off some lows. Google looking better, but got beat up on that Apple news last week. Meta doing its thing. Microsoft doing its thing. Netflix down a little bit after beating earnings and coming up to some fresh highs. Nvidia up here. Let me check Spotify. Spotify should be looking better. I've got a double broken wing butterfly on Spotify. Spotify. So my put fly is fine. My broken wing on the call side is looking better. Still down a little bit. This trade ends up making about $250 on just the credit side. I don't really want to have to wait till June 20th to get these things to pin. But anyway, the good thing is we're below the lows. So as long as we stay, below the lows, that looks good for my call fly. If we start pushing a little bit lower, that's probably good to stay in between the range. So we stay below this, stay above this. Then I have it looks like this. Here's my call fly and put fly combo. So I have credit. I've got a peak on one side, peak on the other side. I've got risk if we're way up here or way down here. Then I take on risk. But hopefully it's going to stay somewhat in the middle. Okay, Tesla back up into the 300s. Just rolling calls right now. My calls are 255 and 277.50, which isn't great. Obviously, I'm like, oh fudge, I'm down, 30, 40, $50 a share based on, the rip we've seen. But if I can still grab $200 to $300 a week, I'm going to grab $200 to $300 a week. Look, Tesla's not going to go up in a straight line. If we get, this gap today and all of a sudden price is just sideways, well, that's fine. I'll just keep rolling calls. If price pulls back a little bit, I'll keep rolling calls. So I'm not in a hurry. I might lose on the covered call, but I'm still lowering my cost basis on the net position, allowing me to build, hopefully a bigger gain. So, I mean, right now my Tesla, I own it at like 234, and that chunk gets called away around 255. So it's $21 a share times 500 shares. Like, it's fine, and I'll use it as an income source right now. Berkshire, still watching this one. I think this could be a range trade as well. This might be a good barometer for the market. If we, can't break highs, come back down to lows, or we just stay sideways for a while, I'm just going to try to sell a bunch of covered calls. Bonds, like I said, a little bit concerned in the bond market because we are going lower in bonds. We're going up in yields. This inverted yield curve stuff, if we look at the 10 and the 2-year, so the 10 and the 2-year still way above the 0 line, 10 and the 3-month at the 0 line. Mortgage rates, we're watching 20, 30 basis points increase. So average mortgage rate hasn't really changed much, around 6.75. Currencies, we did. I did get a nice trade on Lyft. So I'm holding some shares. I've got like 12 or 1,300 shares of Lyft right now. And that's actually looking pretty good. So let's go Lyft. It's up around $7,700 since last week. Just have a chunk of shares. This put is worthless. I'm just going to let it expire. Only had to pay 7 cents for it, but the rest is shares and appreciation. They did announce a pretty big buyback. I'm looking to see if we get back into like 18, $19. Lyft might surprise us with a lot more upside. I mean, Uber's been pretty good. Uber is nearly trading all-time highs if Lyft gets off of its butt and has room to recover. Even if we're respecting some of these recent highs, I would love to see this thing run into like the 18, 19, 20 zone. There's also a huge gap back here that, let me see what the profit target is on Lyft. I think fundamentally we're looking in the 30s. LYFT. So valuation, price to earnings is still pricey, but yeah, $28 fair value. This gap fill would be around $29. So, I'd be happy here. If we come back to this gap fill, that's probably a spot that if I'm going to dump my shares, it'd be between $21 and $23. So initially I was excited about like a $17 to $19 price target. I'm going to raise it up to about 20 to 23 now. So I have them running. I have them uncovered. I'm going to let them continue to rip. Hopefully 19, 20 bucks. Maybe I'll sell some calls up here and try to get it called away. But I mean, I bought shares at under 12 bucks. So if I can turn this for, $10 a share, that'd be pretty darn good. Not bad. That's it. So, all right, I think I'll wrap it up there for my time this morning, and let's come back and do this again tomorrow. So, tail of the tape, everything's showing up. A lot of it's on the big announcement coming from 3 a.m. China U.S. terms of the trade deal. Look, it's going to take months to officially make this all happen. It's going to take potentially years for all this stuff to get legislated, if you will, to actually negotiate and ink these official trade deals. But the market is trading like nothing matters outside of headline news right now. So, U.S. earnings have been pretty resilient. Buybacks are as high as they've been in 40 years. Trade terms are improving because at least there's conversations happening, which is a lot better than being left in the dark. So, the comeback is good. I'm fine. However, I think that gapping up 3 to 4%, having multiple 1+% gaps, we're probably going to backfill a little bit. So I'm not saying I want to be short the market. It's not that. I'm just hoping that if there's a chance to buy a dip or looking at a structure trade, if we have a high and a high, let's say this market can at least pull back and give us a right shoulder. That would be at least giving traders a chance to participate in a swing, as opposed to you got to buy those highs, because if you don't buy those highs, you can't get additional appreciation. That would be the most frustrating run, is to have a 20+% correction that's literally a V bottom. The only buy would have been if you had the courage to buy this dip, which we did talk about. It was a pullback low, and we tested that on an equal Monday, and that was a cup and handle pattern that we've gotten to. So all my symmetry plays from low to high, higher low to higher high, it's been hit. Okay, if it's cup and handle, there's your swing, there's your projection. I hope we get a pullback. I hope this area, if it holds like this kind of neckline structure, it holds this area and continues to go higher, where we can at least participate in some type of pause or some type of pullback. I prefer a pullback. I'd rather see a pullback to participate in a swing, as opposed to, well, we just filled this, today's gap, and then here we are going higher. So time will tell. But overall, things are green today. That's good. Fresh highs in the portfolio. We're still 5.5 to 6% away from all-time highs, and I'm at, fresh portfolio highs for the year, which is good. Could be better, obviously, but we'll keep grinding. All right, thanks everybody. See you tomorrow. Bye. Let's see. Well, show's still running.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.